let's look at the rankings. This is just the fastest way that I have to see how everything's positioned, and it gives me a little bit of a guide in terms of how I would like to focus and position myself. So one thing that we noted earlier when we were looking at the indexes was that the Russell had the best score, and it actually still does. And not only does the Russell have the best score, but the RSP has the best score, right? And I think that's a really decent sign usually that breadth is starting to improve. RSP being the equal weight S&P. So, a giant company like NVIDIA doesn't have this huge weighting under that calculation. It's just another company out of 500. And when you remove the weighting of the the mega caps, the index actually improves. So that usually bodes well for the IWM, that bodes well for mid caps, that bodes well for market breadth. And then if at any point the Mag 7, the ones that are lagging, if those start to show up, then the market just takes off like a rocket because you already have all of the breadth underneath the market. All the soldiers are participating, and then you get the generals to participate as well, and that creates very strong moves to the upside. Aside from that, the sectors here, the top ones are a little bit unimpressive. Starting to get some improvement here in the industrials, which I think we should take a look at. Healthcare certainly has been improving a lot lately. Getting some improvement here from the jets, which is going to be the airlines, probably bodes well for lower oil, energy, real estate, as well as transports are up there as well. And then a lot of things have kind of fallen off a little bit. Some of the crowd favorites like semiconductors have become neutral, but anything that's blue is neutral and bullish. And semiconductors are landing there, as well as technology. From a stock perspective, semiconductors, banks, airlines, more semiconductors, more airlines. So let's do this. Let's round out the video. We already looked at some of the indexes, right? So we did our review for the week. This one was pretty mixed in terms of the overall scores. Basically, what I saw was neutral and up, essentially. And neutral and up usually tells me one thing. It tells me to day trade with an upward bias. So the ranges are huge, especially in the NASDAQ. The daily charts are still bullish, just more neutral than they've been. And when you have large ranges and neutral structures, then that overwhelmingly, at least for my plan, tells me to use smaller time frames to just trade a little bit faster, as opposed to saying, hey, this is an established uptrend, let's buy 2 months out and just hold. But there are some things that are certainly setting up. So one thing that came up today in the room was Intel. And now that the government has a stake in Intel and has had a stake for a long time, the probability that this doesn't fire and make a new all-time high seems extremely low. So here on Intel, I'm looking for this slingshot squeeze to fire long. I don't have a position here because I did not want to chase it up 9%. But Intel here is certainly very high on the list. Would need a pullback in order to trigger. One that I was looking to buy, and then I pulled the bid on it because I just did not want the headache of being on the wrong side of the 33rd piece tweet, is Valero. So this one has a pretty strong setup as well. The real star of the show here on Valero is the 2-day squeeze. So if you have a chance, pull that one up and check it out. I was bidding on this one, and I decided to pull the bid on it. So I'm going to kind of put that as a disclaimer that I think this is a very good setup. But the crosswinds that I'm seeing between, I'm not seeing a ton of energy in energy. I'm not seeing a ton of energy in oil. So Valero's like this really great house inside of a murky neighborhood. So just putting this one on your radar, because the setup especially on the 2-day chart is quite good. Just understand the risk that you're taking there is going to be significantly higher headline risk than anything else. One that has come up lately, and shout out to Heather for finding this one, and she bought it at the right time, which was 2 days ago, was industrials. So I do like the way that this one's starting to set up. very tight coils here, tons of squeezes, tons of improvement. I'm looking to play this one through Caterpillar, but of course, I personally need a pullback. I have an entry, or I'm looking to buy it right around 890 on Cat. But if you just wanted to play the field here on XLI, I think that this one has a very good looking daily squeeze and is probably ready to take off this top once you have this kind of structure underneath you. This is a very powerful structure, and you would look to target a breakout above that 178, 179 high. Another one that came up was CRDO. So this one's based on a 4-hour chart, and it was certainly down a little bit better this morning. The buy zone on this one is 235, if you can believe it. That is where the buy zone is. But I do like this one. This one would be more of a bang-bang kind of trade where it's a 4-hour squeeze. I think you can get probably 30, 40 bucks out of that squeeze. Of course, you want to try to buy it as good as you can, but maybe close your eyes and buy as a strategy on CRDO. And then a couple more here that came up that I thought were pretty solid. So Hood is another one that I thought was pretty solid. This is a proper breakout pattern. Now again, there's the old saying, Tudor Jones, nothing good happens under a daily 200. So let me kind of put this one more in the speculative pile, although I think I see this one pretty clearly as wanting to break out above this major kind of zone here. Looks like a giant base to me with a target at least at 103. And then one that's already doing the thing and maybe cleaner and maybe more representative of more direct trade would be something like financials here, XLF, because this one was under its 200, but notice how it's under the 200 with buy signals, right? And so as of today, it's actually trying to take the top off this pattern, and then underneath it, you have this kind of very constructive impulse consolidation break pattern, clearly above a 200. Indicator was liking it even before that happened. So very clean move there in financials. So maybe to put a point on it, there's 3 things, maybe 4, that off the top of my head look good. I'll give you the 2 sectors that I'm really focused on, and then from there, kind of turn it over to you, and maybe you can find what you like inside of those sectors. I'll also tell you what I like. So the 2 sectors that I saw that look continuation, if not breakout ready, it's going to be industrials and financials. Now, of course, semiconductors rule the world, so at any point, feel free to close your eyes and buy a semiconductor, and I think you'll do well. But in terms of technical patterns that have squeezes or are exiting squeezes out of basing formations, the 2 that I like the most are XLF and XLI going into next week. XLF, I probably would play the field. City is the best looking one, but at this point, personally, I would just probably play XLF. That way, no matter which one works, they all work. Or XLI, and the way that I would be looking to play XLI personally is actually through Caterpillar. So those are going to be the 2 ideas that I'm going to be focused on as early as next week. All right, guys, that's my time. Thanks as always. Before you go somewhere else on the YouTube, though, I do want to direct you here to Danielle's webinar from yesterday. She has this pre-earnings momentum indicator that she's been working on, and what it does is it basically will look back at a number of quarters for earnings and analyze pretty much everything you could want in terms of pre-earnings momentum. So she's looking for things that are going to run into their report. So you try to buy them usually right around 21 days before the report. If using her indicator, you can see if something has a high probability run into the earnings report. You buy calls, you buy your call debit spreads, and then you look to sell them before the report so that you can remove the risk. So the cool thing is it is tying in not only pre-earnings momentum, but then post-earnings outcomes, right? Now, for the most of us, what we're going to do, and the way that I'm going to be using her indicator, because it is one that I resonate with and that I will be using myself, is I'm going to be using it for the pre-earnings momentum run. and it's going to allow me to find things that will run before the report, get that 21-day run, get all that hype. You get to buy it 21 days before. Once the indicator has pointed it out, then you sell it before the report and let the chips fall where they may after that. And that sounds pretty good to me. So if it sounds good to you, simplertrading.com/earnings. Check out her webinar. She did a great job on this indicator. She's worked on it for a very long time. It's one that I'm personally going to be using as well, and I think you'll find a lot of benefit in it. That's my time, guys. See you next week. Cheers.
Hey traders, this is Sam with Simpler Trading. I want to thank you for watching today's video. Hopefully you found the information in it helpful. If you did, leave us a like, leave us a comment. It really does help us out with the algorithm. And if you want to see us trade live with our own real money and be part of the community, come and check us out at simplertrading.com.